welcome to the stage the Head of Strategy Customer Solutions at BBVA, Alicia Pertusa. Thank you. Welcome, Alicia.
Thank you.
And we're now going to introduce her virtual guests. The first is Christine Young, who is the Managing Director at Accenture LLP. We're very honored to have you here. Christine, welcome. A round of applause for Christine, please. Excellent. And guest number 2 is Christopher Mai, who is the co-founder and co-CEO of Finwa. Welcome, Christopher. There he is. A round of applause for Christopher. Thank you very much. And rounding up the lineup perfectly, we have the Global FinTech Co-Head at Consensus, who is Lex Sokolin. Welcome, Lex. ¿Dónde está Lex? Fantastic. Well, round of applause for Lex. Okay, Alicia, the stage is yours. Thank you.
Thank you, Oisin. Thank you very much. It's a pleasure to be here with you. Thank you very much. Panelists, can you hear me well? Great.
Indeed.
I can't say I do feel a little bit lonely out here, to be honest, on stage. I wish you would be here, but I know that as things get back to normal, we will most likely be able to meet very soon. Let me tell you what you have in this room that you can't see from where you are. Here in Madrid, you have a vibrant crowd of startups, students, investors, corporates, public institutions. The room is full, pretty full for COVID standards, I'd say. And everyone looks like they're looking forward to hearing what we have to say. A very brief word about myself. I work in strategy in BBVA Client Solutions. That is the area of BBVA that looks into the long-term transformation of the business. And it's within this area that we've done everything related to blockchain, crypto, DLT technologies in general. It would be great to hear about yourselves. One brief word about what you do, Christine.
To meet you, and thank you so much, Alicia. Christine Leung, I manage Accenture's capabilities in decentralized identity. So identity of things, identity of people, of course, identity of literally everything. So I'm the program advisor to the World Economic Forum for digital identity.
Thank you. Chris?
Yeah, more than happy to, and thanks for the invitation. First of all, so I'm Chris, one of the co-founders and co-CEOs of Finwa, crypto custodian based in Berlin, Germany. And what we provide is we provide custody as well as adjacent services like staking, OTC trading, and so on for institutional investors, and by that empowering them to participate in the crypto ecosystem.
Thank you. Lex?
Thanks so much for having me on. It's impossible not to comment on the fact that I'm a giant decapitated head on a bunch of balls with internet tubes plugging into behind me. This is the pinnacle of any conference experience I've ever had. It's fantastic, and nothing says 2021 like this. So thank you for, this is literally the visualization of blockchain going on. So my role is to lead and to co-lead the fintech product development at Consensus, which is at the heart of the computational blockchain ecosystem, Ethereum, Web3, things like that. I also spend a lot of time on token economics, and so I take seriously the idea that we can have token-based economies and crypto assets that matter at scale, and so I do a lot of economic analysis around that too.
Thank you, Lex. So let's jump right in. So what a year or a couple of years we had on crypto, right? It all started with the crypto banks and the super tech savvy, but now it's moved to probably first the wealth clients, then retail, and now we're seeing more and more institutions and corporates go into this space. Chris, why? Why are institutions going into the crypto space? What are they expecting to get out of it?
A very good question. I think you mentioned that in your quick intro already. It's not a type of institutions which is going into crypto lately, but it's actually a broad range of institutions or also institutional investors going into crypto. And I think if we go down a little bit, what happened the last couple of years, I think in the early days you saw, if we take out the individuals and maybe the Bitcoin whales, the first institutional investors which went into the space were the alternative investors, right? So venture capital funds, hedge funds, and so on and so on. But what you see since now 2.5, 3 years is that also more and more traditional investors are coming into the space, like asset managers, family offices, and so on and so on. And I think last year, I think this was really where it really kicked off or where it accelerated. You didn't have only people joining or institutions joining the space for investment reasons, like VCs did, or like asset managers did. But you also see more and more, let's say, corporates investing to diversify their treasury. You see corporations building blockchain use cases like Deutsche Telekom, which is the large telco provider here in Germany, who is setting up a staking infrastructure and thus is also participating in the whole ecosystem, and therefore is also holding tokens, or they call it investing into tokens. And I think this is something which is even accelerating more, which is evolving. So I think it's from the alternative investors who started a couple of years ago to shape the ecosystem to the traditional investors who obviously mostly invest for the return reasons. Institutions, corporations, they understand that this is a technology where they also have to build new applications, new services in. So they're not necessarily only coming for the investment reason anymore, but also to build new business model, to build new business cases. And I think this is then also what the breadth of the blockchain ecosystem and all the opportunities which are lying in their show. So it's not necessarily only an investment use case, but it's becoming more and more mainstream also on the let's say on the industrial use factor.
Thank you very much. Christine, identity plays a very big role in everything related to blockchain, but it might be even more challenging for institutions. What are your views on identity and institutions crypto?
I think it's one of the questions that is often neglected. As sort of the crypto movement started, identity was assumed to be, the standard things like KYC, AML, that sort of thing, and most institutions find that to be quite hard. And actually, if you start looking at the back office costs of doing KYC, AML, it's very, very expensive. And as we trade and institutions start to build funds, build infrastructure, all of that, and start the proliferation of crypto assets across the board, whether it's from properties of tokenizations of properties, land rights, to carbon, to all things that can be traded on crypto assets in many ways. Identity is going to play a much bigger role, as Tim Berners-Lee once said, that when the internet was built, they forgot the layer of identity and the aspects of how do you ensure that we as individuals who own the assets are who we are, that we delegate the custodianship of those assets to our fund managers, to our investment managers, and then to the banks. How do we make sure that chain, especially now is all digital, how do we make sure that chain is not broken, that is legitimate, that actually it can be managed appropriately and is secure? And I think that aspects, as we look at the full digitalization and of crypto assets, that really need to be think about, because that bit of the who owns what and how do you trace what, that is still very much paper-based, because we can have the sort of amazing token assets of different things right now, but that bit of onboarding, management, the changing of the assets associated with the institution, that bit is still quite hard. And the manual aspects of it and the paper-based aspects, having people at the back office say, is this really that institution? Is it, those keys, do they belong to someone else? All of that is going to be a challenge. So I think identity plays a critical role as we go forward. And institutions really ought to think about that early on, especially things related to custodianship of crypto assets.
Thank you, Christine. Lex, talking about current, very, very current events, China seems to definitely be getting out of crypto. It's been sending signals for quite some time, but the last banning of any crypto activity for Chinese citizens is very clear. At the same time, we see a very strong movement of CBDCs, central bank digital currencies. How do these two things, these two current events, come into place with institutions entering crypto?
Nice to see you again.
Yeah, so I think this is a very complicated space, and so there can be a simple answer, which is just that to develop a centrally managed digital currency, CBDC, China needs to get control over a couple of things. One is its fintechs, and two is its retail crypto activity. And so it's done that by trust busting and financial into a bunch of independent companies that are just banks at this stage. And then in banning public crypto assets, on-chain crypto assets like Bitcoin, Ethereum, and other things that sort of the open source movement and the open source community has developed. And I think that's one narrative. I don't think it's entirely true, but it's one narrative. And you can think also from the West how important it is then to defend the open source software, because it is essentially the US dollar and the euro that's digitized on there. Largely, DeFi assets are dollar denominated, so I think it's a geopolitical interest for the U.S. to promote stablecoins, to generate clarity and make it easy for folks to transact. Unfortunately, I think the underlying reality is harder than that answer, which is really where's the innovation coming from, and what is Web3, and what actually matters, and what is a derivative reflection of the things that are going on. And so, I would advise folks to be really curious about why hundreds of millions of people, now about 300 million addresses in play, why hundreds of millions of people are downloading crypto wallets to engage in new forms of finance, new forms of media and creator economies, new forms of making art and relating to each other, and why they are largely sidestepping traditional infrastructure to do so. And I think when it comes to institutions and governments in looking at this ecosystem, it's not about how we make the old thing better. It's not about cost. It's not about blockchain replacing one of the 40 horrible pieces of software you have in your bank stack. It's about the new asset class and the new thing that people who are excited about the future of technology are actually doing. And a new asset class means new revenue opportunity rather than kind of cost savings. And so I would advise folks to be really interested in how people are building the stuff and why they're building it, and how to go to the long tail on chain and participate in this. And I think we're going to see quite a bit of struggle from traditional players in incorporating the long tail of NFT and DeFi, but that's really the core of where the innovation is happening today.
Thank you, Lex. Actually, BBVA has been leading this space. We launched a service for cryptocurrency custody and trading for our clients based out of BBVA Switzerland. So we are well aware of the challenges as a regulated financial institutions to be able to offer this new asset class to all kinds of investors. Chris, from your experience, what are the tools that institutions can find to get exposure to digital assets?
Yeah. I mean, there are like briefly said, there are two options to have access to digital assets, right? So on the one hand side, you own the asset directly, like you own the Bitcoin, and I think there's this famous saying, "Not your keys, not your assets, or not your crypto." And I think this is very, very true for those people who want to own the token, who want to own the crypto asset. And on the other hand, obviously, what you see over the last couple of years is that there are more and more, let's say, derivatives or instruments being created which track the performance of the actual tokens, like be it on the one hand side ETP, so exchange traded products like nodes, certificates, and so on and so on. Or it's also like actively managed assets, asset management funds. But I think it all comes down to what Lex was actually briefly touching. It's not that we are building this ecosystem to make things a little bit better or to create additional returns for investment managers, but it's really something which is changing the way we think. And therefore, I think all those derivatives like nodes, exchange traded products, and so on, they are going against the actual sense or the actual meaning which lies within crypto, because the meaning is actually that people own the tokens by themselves, that there are no intermediaries in there anymore, that they can access their token whatever happens. So even if your bank shuts down, you can still access your tokens. So what we see is that those investors who understand what crypto is about, they want to directly own the tokens. And those investors who are rather in there for the, let's call it for the return opportunities and not for the greater good or for the change of something, they just care about the returns. They are also happy with, let's say, with tracking certificates and so on. But obviously, those people who are in the space, they will always prefer to own the tokens by themselves. And that's also what I, from a personal perspective, but also from my professional perspective, can just only encourage everybody, be it an individual or an institution, to really get the full access of the opportunities which lie within crypto.
Thank you very much. We only have 2 minutes left. Lex, how can institutions overcome the challenges to get exposure to digital assets?
So this is the exciting thing, is that we're finally realizing what Web3 is for, right? Web3 being the internet of money, of value, of identity, as mentioned before, relative to the internet of media and advertising, which we had prior. And so we're understanding this, and so we understand that this is a place of incredible growth and client opportunity and revenue generation. And so Consensus provides MetaMask, which is an on-chain crypto wallet with about 10 million monthly average users these days, up from about 100,000 2 years ago. And we've made it so MetaMask can be used by institutions and plugged into a compliant process. And kind of the wave that we're seeing is this phase shift from, how do I engage a digital transformation of what I do, instead to how, as an institution, can I be a financial or a productive participant in a new economy, right? So think, how does Walmart think about e-commerce in 2002? That's sort of the moment that we're in. And so for institutions to figure out how to do custody, how to do identity, how to do this safely with a multi-sig and in a way that their teams understand and support is key. And so I would just encourage, again, everybody to get their feet wet where the water is, because it's available.
Thank you. Thank you very much. So one last word, Christine, where can people find out more about you? You're in mute. We can't hear you.
Hi?
Oh, yes. Perfect.
Yes. I'm on Twitter, I'm on LinkedIn, and feel free to connect. And I think as aspects of as the Lex mentioned, identity is going to be a big thing, especially for people who don't actually know very much about the technology or underlying technology of crypto and blockchain. It's another asset, and all types of different assets. In understanding that, I think the people, the user centricity aspects of it is going to be increasingly important. So feel free to connect with me on LinkedIn and Twitter, and happy to discuss more.
Thank you. Chris, where can people find out more about you?
I think the general channels like obviously Twitter, LinkedIn, but also more on the decentralized side. So BitCloud, for example, for those who know that, or just via our company homepage.
Thank you. And Lex, where can people find out more about you?
You can find me in the metaverse on Twitter, Lex Sokolin. Check out MetaMask at metamask.io. And then I also write a newsletter, fintechblueprint.com, that goes into all of these fun themes, and of course, consensus.net.
Thank you. And check out bba.com for more information on our new developments. Thank you very much.